Hello friends, welcome to my channel Easy Accounting Hub. Make your study easy. This is Suni with you. This is my first class for accounting beginners. This is journal entries. So how to journal? What is journalizing? What is journal entries? This is the basic of accounting. You have to know the basic of accounting very well, because when you are going for higher studies, higher classes, and for an accounting job, it is very important that you have to know the basic of accounting. So you have to study very well. Okay. So journal entry is based on double entry principle. So what is double entry principle? So double entry principle means each and every transaction will have two aspects, one giving aspect and one receiving aspect. Example, I am a bookseller, so I am purchasing books and I am selling books. So when I am purchasing book, there is a giving aspect and receiving aspect, no? So receiving aspect is book. I am receiving book. That is receiving aspect. And I am paying cash. That is giving aspect. So when I am purchasing a book, the receiving aspect is book and the giving aspect is cash. Okay. So like that, when I am selling a book, the book is going outside the business and the cash is coming inside. So the giving aspect is book and receiving aspect is cash. Okay. So which means each and every transaction will have two aspects, dual aspect, that is giving aspect and receiving aspect. We can call it as debit and credit. Okay. So the accounting entries are based on this double entry principle. So you have to know what is debit and credit. Okay. This is an accounting term, debit and credit. You have to write DR for debit and CR for credit. Okay, let's go for the class. So what is journal? A journal is a chronological record of financial transactions of a business. So it is a chronological record of financial transactions of a business. Okay, so a journal is a book of prime entry or a book of original entry in which transactions are first recorded in a chronological order, in the order or sequence they are entered. Okay, which means we have to record the transactions in order. Okay, so journal is a chronological record of financial transactions of a business. This is the first book of accounting. This is a basic book of accounting. That's why we can call it as book of original entry, and this is a book of prime entry. Okay, so this is journal. So what is journalizing? Journalizing is a process of recording transactions in a journal. So journalizing is a process of recording transactions in a journal in an order, in a chronological order. That is journalizing. Okay, I will teach you what is cash transactions and what is credit transaction. So cash transaction means receiving or paying cash at the same time of transaction. Example, sold goods for cash, which means we sold goods and we received cash at the same time. Example, a bookseller is receiving cash and he is giving book. As per double entry principle, one receiving aspect is there, one giving aspect is there. So book, we are giving book to the customer and we are receiving cash. So that is cash transaction. Credit transaction means the payment or receipt will be in a future date. So we are not going to pay the cash for same time and we are not receiving also. The payment or receipt will be in a future date, that is credit transaction. So for cash transaction, how will be the journal entries? Okay, so when we are receiving cash, we have to debit it, and when we are paying cash, we have to credit it. So receiving cash, when we are selling goods to the customer, we are receiving cash and we are giving goods or books. Okay, so we are receiving cash, then we have to debit it. So when we are paying cash, we have to credit it. Example, we purchased goods for cash, which means we are paying cash and same time we are receiving goods. Okay, so when we are receiving cash, we have to debit it. When we are paying cash, we have to credit it. So this is cash transaction, the rule for cash transaction. When cash is coming inside the business, when cash is receiving, we have to debit it. When cash is paying, that means cash is going out of the business. So which means you have to credit it. When cash is paying, when cash is going out, you have to credit it. So this is the rule for cash transactions. Okay, I will tell you two examples. Sold goods for cash. Okay, sold goods for cash means cash is coming inside the business. So when cash is coming, we have to debit it. So that means cash account, we have to debit it. So cash is coming inside the business. Cash is an asset. When asset is increasing, we have to debit it. So cash account debit. Okay, the cash is received for sales. So we have to credit sales. So sold goods for cash, entry will be cash account debit to sales. Okay, next purchased goods for cash. Purchased goods for cash is going out. Cash is going out and the goods is coming inside the business. So purchased goods for cash, cash is going out, and when cash is paying or when cash is going out the business, we have to credit cash. So we have to credit it. So purchase account debit to cash. Okay, so this is the example for purchase and sales. Sold goods for cash means cash is coming inside the business. We are receiving cash. So we have to debit it, and sales we have to credit it because it is income. All income we have to credit it. Then purchased goods for cash. That is purchase account we have to debit. Cash is going out, so we have to credit it. Regarding credit transaction payment will be in a future date or receipt will be in a future date. Okay, so how will be the entry? Let's see. Sold goods for cash, that means cash is coming, but sold goods to Mr. A. See, this is not a cash transaction. We sold to Mr. A, but we did not receive the money. So which means we have to write A account debtor, because this amount is receivable from Mr. A. So sold goods to A, it is not for cash. So A's account debit to sales account. So this is credit transactions. So A's account debit to sales account. Okay, then purchased goods from B on credit. So we purchased goods from B on credit. It's for credit. It's not for cash. We did not pay cash. The payment will be in a future date. So cash is not going outside the business now. It's not going out. So we have to credit because it is payable to B. So we have to write B. B's account credit. We have to credit B's account because it is payable to B. It is payable to B. Okay, so credit transaction means transactions are on credit. We are not paying or receiving on time. So it will be the payment or receipt will be in a future date. That is credit transaction. So example, sold goods to Mr. A on credit, which means the amount is receivable from A. So you have to write, instead of cash is not coming. Instead of cash, A, we have to debit A because it is collectible from A. Okay, the entry will be A to sales. Then purchased goods from B on credit. So we purchased goods from B, we did not pay the amount. So it is payable to B in a future date. That means the entry will be purchase account debtor to B instead of purchase account debtor to cash. If it is a cash transaction, you have to write purchase to cash. But here you have to write purchase account debit to B because it's payable to B. Okay. So normally accounting journal entries, for journal entries there are some rules of debit and credit. Okay. I will teach you rules of debit and credit in coming classes, but now I am trying to explain simple entries. Okay. So hope you all understood this. Okay, let's go for a question. Please listen. Journalize the following transaction. First one, Nivin started business with cash rupees 4 lakh. So when owner is bringing cash into business as capital, that is we can call it as capital. The owner is bringing cash for his investment, that is capital. So in this entry, the owner is bringing cash to the business, that means cash is coming inside the business, rupees 4 lakh. We can call it as capital. So cash is coming now inside the business, so we have to debit it. When cash is coming, we have to debit it. When cash is going out, we have to credit it. So in this entry, cash is coming inside the business, so we have to debit it. So I'll write first journal entry, cash account debit to capital. This is owner's investment, and we have to write the date and all. Jan 1, cash is coming inside the business 4 lakh, so debit column we have to write 4 lakh, and here also we have to write 4 lakh. And we have to write a description on the entry, that is, or we can call it as narration. So we have to start with being capital investment by Mr. Nivin, capital invested. So the first entry finished. So in this entry, Nivin started business with cash rupees 4 lakh. So Nivin is bringing cash inside the business, so that means cash is coming inside the business. So when cash is coming inside the business, we have to debit it. We have debited, cash account debit to capital. Okay, second entry, purchased goods for cash. Purchases, this is our expense. Purchased goods for cash. Cash is going outside now. When we are purchasing, cash is going outside. So cash, when cash is going outside, we have to credit it. So the entry will be, this is Jan 2, purchases account debit. We have to debit purchases account debit to cash, because cash is going outside. Cash account credit. The amount is 50,000. So the narration is goods purchased, being, we have tried being, goods purchased for cash. Okay, finished. Second entry. Now third entry, sold goods for cash, rupees 4,000. See, sold goods for cash, it is a cash transaction. So cash is, when we are selling goods, cash is coming inside. So when cash is coming inside the business, we have to debit it. So entry will be cash account debit to sales account credit. So the amount is 4,000. We have to write a narration also. Being sold goods for cash. Okay, so this is cash transaction. So these two transactions are cash transaction, because purchased and paid cash, sold and received cash. Okay, next, fourth, purchased goods from A, rupees 4,000 on credit. Purchased goods from A, but it is not for cash, it is on credit, which means payable to A in a future date. We have to pay to A in a future date. So payable to A, it's a liability, for us a liability, because we have to pay it in future. So the entry will be, normal cash purchases entry will be purchase account debtor to cash. But here purchase account debtor to cash we cannot write, because cash is not going outside. So we are not paying. So we have to mention A, because it is payable to A. So the entry will be purchases account debit to A's account, because it is payable to A, rupees 4,000. Narration, you can write purchased goods from Mr. A. Purchased goods from Mr. A. Okay, fifth transaction. So sold goods on credit to B, rupees 5,000. So sold goods on credit, it is a credit transaction, because the amount is receiving in a future date. So credit transaction. So normally cash transactions, what is the entry? Cash to sales. So here cash is not coming because we have to write Mr. B's name because it is receivable from Mr. B. So the entry will be B's account debit to sales account credit. It is 5,000. Amount is 5,000 and we have to write a narration, sold goods to B on credit. Sixth entry, salary paid rupees 4,000. Salary paid rupees 4,000. Cash is going outside. So cash we have to credit it. The expense paid, actually this is an expense, salary. So entry will be salary account debit to cash account credit because cash is going outside. Entry narration you can write being salary paid to so and so. Okay, amount is 4,000. Okay, next is rent paid. Same, see instead of salary, rent will come. So rent to cash. Okay, rent account debit to cash. Printing and stationery purchased. So we can write printing and stationery account debit. Printing charges account debit to cash. Okay, so the expense are like this. Okay. So here I will write rent account debit to cash. Next, commission received rupees 600. So this is received, rupees 600 received as commission. So cash is coming inside the business, cash must be debited. So cash account debit to commission account credit. Being commission received. Okay. Next, computer purchased for cash rupees 5,000. This is also cash transaction. So computer purchased for business use, office use. So that is asset. So we have to debit concerned asset. So it is not for the purpose of selling. Computer purchased for office use. So you have to debit computer because it's asset. So computer account debit to cash. Cash is going outside. Cash account credit. Narration also we have to write. Okay, last one is cash paid to Nivin for personal use rupees 4,000. Cash paid to Nivin. Computer is 5,000 and commission is 600. Okay. Cash paid to Nivin for personal use. So when owner is taking cash from business, we can call it as drawings. He used this cash for personal purpose. Okay, so cash paid to Nivin for personal use, rupees 4,000. We can call it as drawings. So drawings account. Cash is going out now here also. So cash must be credited. Cash account credit. Amount is 4,000. Okay. So in this question, these two entries are cash transaction and these two credit, and these all are cash transaction because salary is paying, rent is paying, commission receiving, computer purchase for cash, cash paid to Nivin for, so cash is going outside. So in these two entries only credit transaction. Okay. So here sold goods, purchased goods from Mr. A. So this is payable to A. We can call them creditors. We have to pay to A. So they are creditors. We have to pay to them. And here sold goods on credit to B, which means receivable from B. So we can call them debtors. So this is creditor and this is debtors. And here cash paid to Nivin for personal use. So whenever owner is taking any cash from business, we have to debit drawings account because he is drawing for personal use. So drawings account. Okay. Then here salary paid, rent paid, so these are expenses, and we have to credit cash because when we are paying salary, cash is going outside the business, we are paying cash. Okay, so here computer purchased for cash, the computer purchased, and we are this is for the purpose of selling. Then the account you have to debit purchase account only, but here the computer purchased for office use, it is your asset, so we have to debit concerned asset. So computer account debit to cash account. Okay, so this is journal entry class. In this class I have explained few cash transactions and some credit transactions also. Hope you all understood this class very well. I'll be coming with the new videos for journal entries. In my next class, I'll teach you bank transactions. So, if you like my channel, please like, share and support me, and please subscribe, and please let me know your comments also. Thank you so much for watching. Thank you very much.